Welcome to Every Dollar Counts with Josh and Jay, a shot of truth serum for your investment and insurance questions. I am Josh Knoll, the owner of Gulf Coast Financial Advisors, and I'm joined by my co-host, Mr. Jay Stubbs, the director of the Gulf Coast for Concourse Financial Group. We are brought to you on the Gulf Coast Financial Advisors Podcast Network. Well, today we are going to be talking about the need and the method for doing a personal financial assessment, particularly as we enter the fourth quarter of the year and we face the end of the calendar year, which for most folks is the end of their fiscal year as well. Joining us in this conversation is our very special guest, Will Stye. Will is a fellow advisor. He works with me at Gulf Coast Financial Advisors, and he's also the co-host of our sister podcast, Wealth and Waves. But before we dive into and introducing Will and bring him into the show and talking about personal assessment, we're going to have our friends from Sloth Racer kick us off. Jay, how you doing today, buddy?
Josh, great. Happy end of summer, beginning of fall to you. Good to be back in studio here at Deep Fried Studios with Johnny, and just happy to be a part of Every Dollar Counts and with our messages we're sending out to our listeners.
100%. And I'm excited to bring in Mr. Will Stye all the way down from Nash Vegas, co-host of the Wealth and Waves podcast. He's joining us as a third member here on Every Dollar Counts. Will, how are you?
Gentlemen, it is a privilege to be with you here today. I so appreciate that. It's exciting to be back with Every Dollar Counts, especially in light of us thinking back to how much fun we had and, quite frankly, a lot of great feedback we got from folks on our Boss series.
Yes, absolutely. Yeah, folks, I was going to mention that later, but if you can go back in our catalog, it's going to be in our first 10 episodes. It's the Boss series, Business Owner Strategies and Solutions. And
I came up with that,
he
by
did,
the way.
Yeah,
that was a Jay, yes, for
that
sure.
was Jay's
Stubbs.
big brain. I was like, oh my gosh, how did I not see that right in front of my face? But in that particular series, we did, I think, 5 or 6 podcasts. We talked about non-qualified deferred comp, cash balance plans, key person planning, so on and so forth. Great series. It was a lot of fun. And as Will alluded to, we had great response from that with our business owners. Definitely worth a re-listen. So today what we're going to do, Jay, we're going to be talking about personal financial assessment. And again, it's kind of a timely thing. We tend not to timestamp our podcast, but we are coming into the fourth quarter of 2021. And this is really kind of a good time to start diving into these things so you're prepared. Particularly because some of the rules related to some of the things that you do in your personal finance may change in 2022. So your timing's good. Let's get this thing shaped up and ready to roll in 2022. So Jay, I'm going to go ahead and kick it to you. I think you wanted to start off with taxes.
Yeah, and because we have Will here, it's also a good resource to have and commentary on last year, this year, am I making more or less money? What types of things do I need to start gathering to file my taxes for 2021? What deductions do I need to start making sure I have that I can take advantage of to limit my tax burden when it comes to filing time? A lot of people wait until late January, February of the tax filing season to do this, but I have found that if people start gathering and getting organized in October, November, December timeframe, it makes it much easier. So if they're in a position to potentially get refunds, if they're in a position to, if they're going to owe more tax liability, it gives them more time to kind of find those dollars to send. And it's just a good way for all of us to remind, or a good thing for all of us to remind our clients and anybody we deal with to start reviewing those tax liability items.
Will, as many of y'all that listen to Wealth and Waves or have listened to the Boss series, is a CPA by training. But however, he's a practicing financial advisor. But in your career, you have prepared tax returns for other folks. You've given tax advice as a CPA. And so what I was going off what Jay was saying is typically in that type of environment, putting your CPA hat on, what were some of the things you were advising your clients on as a CPA as they started entering the fourth quarter so that they didn't just dump a big load of crap on your table come the beginning of the year?
No, I so appreciate what Jay had said about, organizing early. That's just one of those things where it could be a lot less stressful on you, the taxpayer. And I guarantee you every single tax filer that's listening in, tax preparer of filing forms listening in, when they heard Jay say that, was like, yes, from Jay's lips to God's ears. That helps to make the whole process, quite frankly, can actually make, maybe save you some on the bill, the invoice you're going to get from your CPA. We used to call it the shoebox effect. Like you don't show up with the shoebox of receipts and then expect somebody to put that together. But along the way, with technology and everything else we have these days, whether it's QuickBooks Online, I even manage my own finances relative to the firm activity by using QuickBooks. You can clear and scroll through transactions and do that while you're in a waiting room waiting on somebody. You can actually do that just by an app on your phone. So being organized, staying organized. Then also, Josh, to be more specific here, as you look at that, start giving consideration to, okay, so if there's, in this case, 3 months left until the end of the year, is there anything outstanding from a receivable standpoint that you could collect? I would encourage, given our tax environment, it would probably be like there's an exception always, but it would be my general rule of thumb. So go ahead and recognize income this year when tax rates are still at their lowest. They're going to change. They'll be higher next year. Go ahead and realize income now. And at the same token, it's going to sound a little bit counterintuitive, but I might push off some expenses until next year, because what that means is I want to have the expense book in 2022, which will help to lower the taxable income then at a higher rate. That's good math. That's the kind of math you're looking for here. So recognize income early and defer expenses where and when you can.
Very good. Well, on that note, I'll transition to looking at the expenses, looking at the deductions, looking at the income. Also, too, I think it's a good time to look at your contribution to your 401k or your IRA. Now most people are set up typically on a 401k where they're making contributions for every pay period in regular scenario. What a lot of people don't understand is if they're coming towards the end of the year, they do have some flexibility to increase those contributions as long as they haven't hit the limits of either the 401k or the IRA. And then, of course, IRAs, a lot of times you will have that in an individual setting, individual retirement account. We have business owners. Some of them make regular contributions. Some of them wait till the end of the year, see where they're at, and they dump a big load in there, particularly with the SEPs as it comes to tax filing year. So I think one of the things that would be as part of the personal financial assessment is, is this the year? Do I have the ability to contribute more? If so, what does that look like? Do I want to do it in a lump sum? Do I want to maybe increase my pay period contributions along that line? And then this is one thing I wanted to ask you, Jay, that is kind of, not, like Will said, counterintuitive to a certain degree, but with that said, and with the market at a historical all-time high, it seems like we've been saying that for the last 12, 18 months, doesn't it?
Well, we have. It's been doing really well.
Right.
There's a little volatility out there now, but it's been doing well.
Right. So, maybe is it time to take chips off the table? Kind of ties back into what Will said. This may be the lowest tax rates we see in a while.
Well, I like to always say that if in your assessment, obviously everybody each year gets older. Are you getting closer to maybe a retirement time frame? Are you getting closer to a change where there's going to be higher expenses, kids going to college? Are you going to be getting closer to some sort of financial lifetime event or lifestyle event that's going to make you need to make some changes? When you say taking chips off the table, retirement red zone is 5 years from that time frame. You want to start maybe getting from the super uber aggressive portfolio to something that's got a little bit more conservative play in it. So I imagine that some people want to consider that, and they also, for those that have done a good job of saving money for expenses that are coming up, they want to start grabbing those dollars and positioning them in a way so that they have access to them and they're not going to be at risk. So yeah, that's one of those things that all of us need to consider as we get older, as we get closer to different life events. And
it brings up a good point too, Jay, kind of segueing into that, the idea that as we approach the end of the year, take a look at the portfolio, and in that review, everybody likes to talk about their winners. I've never been to a cocktail party where somebody was just bemoaning the fact that they lost their shirt on a particular holding. That doesn't necessarily work, but when you do look at your portfolio, there will be losers in there, and that's a time to take what we call tax loss harvesting into account and say, hey, let's pare back on some gains, offset them with the losses, and you actually can generate up to $3,000 will be deductible in the form of a capital gains for the $3,000 loss there. So that's certainly tax loss harvesting is the phrase we use to describe that strategy, and it's certainly it will be applicable.
Well, in that same vein of thought, are there any assets that have appreciated that we could get some sort of charitable deductions? I don't recall seeing any restrictions on any charitable contributions and deductions that are under the current proposals for tax legislation. If there are, I missed it, but some people like to make year-end gifts to their favorite 501c3 churches and schools and nonprofits. They can do that with cash on hand. They can also do that with appreciated assets that might be inside of a portfolio. They can even give away a car if they want to. So there's lots of different things that you can do to help your tax situation, and it's now is the good time to start thinking about those things.
Well, very good. So we've talked about taxes. We've talked about when to claim income. We've talked about contributions to your qualified retirement accounts. We've talked about tax loss harvesting, potentially taking some chips off the table. So now we're going to pivot a little bit on the personal financial assessment to risk management, something that is near and dear to all our hearts here. All three of us listeners have a fairly extensive background in risk management, And what I mean by that, life insurance, disability, long-term care, these are things that the three of us in here, I'd hate to add the number up, but it's probably a fairly sizable number of years of experience with those things. So Jay, I'm gonna go to you. This is a good time of the year to look at those life insurance policies, those disability policies, and if so, why?
Well, let's take disability first. If I've made more money in 2021 than I did in 2020, then I certainly want to make sure that I'm protecting that income so that I can continue the lifestyle that I currently live. So it's a great time to review your existing disability policy to see if you have any opportunities to increase your coverage, maybe without proof of insurability. If you have automatic increases, you want to make sure you're taking advantage of those, and then to make sure that you've got the proper definitions of disability, that if you've made a job change, if you've maybe left an employer or are soon to leave an employer, you might be losing a disability policy, so it's time to get your own. So those are very important things to look at in the disability income protection, and that's anybody working, anyone, 25 all the way up until age 65. That's those age groups, that demographic needs to protect their income so that they can continue their lifestyle should they not be able to work. On the life insurance policy side, a lot of things need to be looked at. Has your health changed? Has your asset position changed? Have there been any beneficiary designations that you need to take off or add to policies? Think about lifestyle events such as divorce or marriage. Are there opportunities to check into your portfolio? Do you have a term policy that might be expiring soon and you want to make sure that you prolong that coverage maybe for a little bit longer? Do you have a cash value policy that has performed really well or maybe underperformed, and you need to assess and ask for what we call in the industry an in-force illustration to make sure that that policy is doing what it needs to do as you intended for it to purchase when you purchased it. So life insurance, disability income protection, and then the last one you mentioned, long-term care. Those we've already talked about, heading towards retirement red zone. Obviously you've protected your income through disability, but you also now need to start thinking about building a fence around your assets to protect your assets should you need to have care at home or in a facility during your retirement years. And I'm not talking about when you're 65 and you immediately decide that it's time to retire. Those things that may creep in and be health incidents that happen at age 75 and 80 that you don't want to have to worry about. Maybe you could have an asset and leverage it and have some long-term care bucket of money to use to pay for that care at home or facility care. So all things that need to be reviewed in the insurance space, not to mention the health insurance. We're not health insurance experts, but also reviewing, make sure you've got the proper plan in place for your family and your employees if you're a business owner for calendar 2022.
Very good. And listeners, these topics we were talking about briefly, disability, income protection, life insurance, long-term care. If you look back in our previous catalog, in fact, our previous episode was about disability income, but if you'll just search back in our 45 episodes we've recorded so far, you'll find a specific deep dive on each of those topics if you want to learn more. What is disability income? How does it work? What is life insurance, term versus cash value, things like that. So we got a great catalog there. All right, so folks, guys, I'm going to give you both kind of a final quick word before I wrap up on the things that both as advisors to retail clients like Will and I do, Jay, in your role as helping advisors like us along the Gulf Coast, and then particularly with Will's CPA background, what's one last little tidbit that you would be sitting down and telling somebody, hey, you know what, end of year's coming up, let's take a look at this and be prepared?
Well, I think just as we're talking through this, the idea of incorporating for those folks who have children still under the roof at home, maybe even it's your college grad that's come back home for the holidays there, helping educate our kids around the idea of personal finances, around the idea of this is why the year end is important. Here's what this is about, and helping a child. If you take plenty of resources out there, if you just were to Google it, but the idea of hey, here's what $1 that comes in the door, and here's what we're actually able to spend as a family. I think those are some pretty basic things as we take a look and try to help our kids get their arms around it. Because I was just thinking back, we're talking about taxes earlier, like it was this thing known in our household as April 15th approached. You just quit talking to Dad when he went down in the basement. He was squirreling himself away, and just you may not have seen him for 48 hours, and if you did, don't speak to him because he may not be in the best mood. He's still trying to calculate the taxes. Again, it's one of these opportunities that we have to try to involve our loved ones and give them some idea. And again, takes the pressure. Let's take the pressure down a notch. We're working through it, and again, have a qualified professional available there to help you with the details that seem fuzzy to you.
And as an advisor to the advisor, one of the things I'd like to mention, if those types of people are listening, and I'm sure they are, is make sure you're not leaving anyone behind. A lot of people have struggled this year with respect to their personal finances, their business finances. A lot of business owners have had significant challenges getting people to come work for them. There have been a lot of ups and downs in 2021 on the back end of this whole pandemic thing, and some people may not be real sure about what they need to be doing. So if you have a chance to maybe get into the middle market, and you usually work on the more affluent market, go do something in the middle market space, and maybe try and find a way or a client to give them some advice or help them with a financial plan, or help them procure some insurance if they think they can't afford it and they actually can, and the different things that you can assist in the financial services space to help somebody that might be in need. Hold yourself out there as an expert. And many of the advisors along our Gulf Coast, they've been doing this for a long, long time, and they might know somebody that needs a little assistance, and reach out and help them out.
Yeah, Will and I experienced that firsthand. Won't name names, but a friend of ours had an unexpected death in the family, and the person was younger, and just kicking ourselves that we didn't even ask the question, or didn't have an opportunity to ask the question, because it would have made the world of a difference on life insurance, right? It's a really important thing.
That's a good word, Jay. Thanks for throwing that out there.
Yeah, that's a great word. I got to do a quick housekeeping for compliance, and then we'll wrap up the show. Jay Stubbs and Concourse Financial Group are not affiliated with Prime Capital Investment Advisors, Qualified Plan Advisors, or Gulf Coast Financial Advisors. And me, Josh Knoll, and Will Stye are not affiliated with Concourse Financial Group.
But we're good buddies.
We are good buddies. And I'll be honest with you, I missed you guys, man. It's exciting to be back in here. Feel my juices flowing again. It's been too long. So listeners, if you have any questions or want to have a follow-up conversation on anything we discussed here, you can reach out by calling 251-327-2124, or you can visit the website, gulfcoastfa.com, and you can always make an appointment there on my Calendar app. Also, to all of you independent and semi-independent advisors and agents out there listening to this show and interested into the value that Jay Stubbs could bring to your practice, you can find him at jstubbs.com. That's JAYSTUBBS.com. Well, fellas, another show in the can. Sitting here in Deep Fried Studios, Mr. Johnny Gwynn. We're going to get a window AC unit plugged into this sucker at some point.
It feels okay right now. I'm getting some cool air.
Maybe it was just all the hot air coming out of us.
I needed to lose weight.
Sauna plus a podcast. So another show in the can. Obviously, want to thank producer Johnny Gwynn. We mentioned him in Deep Fry Studios. Many thanks to my co-host Jay Stubbs. Huge thanks to Will Stye coming down here from Nash Vegas. Also recording a couple of episodes of Wealth and Waves that you all need to keep an eye out for. On that note, this is Every Dollar Counts. I would highly encourage you all, if you like what Will had to say and how the dynamic worked here, go back in our catalog. I think it's episodes 5 through 10, and check out our Boss series. It's really enlightening. It's so much fun to record. And I think we're probably going to re-record it here maybe sometime again and go through that again. And then lastly, and most importantly, a huge shout out to all you all that have joined Jay and I on this journey, and to those of you that are joining us now. Do me a favor, please subscribe on the Apple Podcast app or wherever you find your favorite podcasts. And while you're there, you would be doing us a huge favor if you would rate and review the show. It helps other listeners like you find us. Lastly, you like the show music? Go check out slothracerband.com. That's slothracerband.com. And they're going to take us home now. This has been Every Dollar Counts with Josh and Jay. Advisory services offered through Prime Capital Investment Advisors, LLC, PCIA, a federally registered investment advisor. PCIA, doing business as Prime Capital Wealth Management, PCWM, and Qualified Plan Advisors, QPA. Gulf Coast Financial Advisors is independent of Prime Capital Advisors. Information presented is for educational purposes only, is not an offer or solicitation for the sale or purchase of any securities. All investments involve risk, and unless otherwise stated, be sure to consult a tax professional before implementing any tax or investment strategies.